Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you for joining the session today. Hello, and welcome to another episode of the... Apologies for that. So today we'll be looking at the key market events that happened yesterday, what we're expecting for the day, and of course, we'll do some technical analysis, try to understand what are the key market trends, what are the key market patterns, and where the potential opportunities lie. So I'd like to start right away. Hello, Paul, and thank you for joining the session. So let's get things started. So first, we look at the economic calendar and what happened yesterday. So truly, yesterday there was quite a number of news ranging from Australian GDP, which came in slower than expected. Then we had a statement from Bank of England Governor Bailey, and this was at 2 p.m. Then later on, we had the ADP non-farm employment change, which missed expectations. So what we saw is the US economy creating 103,000 jobs in the private sector. And this was less than the previous number, and of course, less than the expected number, which means that the US economy is creating a smaller number of jobs, which basically means that the job market is tightening. So now there is anticipation that as we approach Friday, there is a potential that we'll be getting a lower than expected number on the official NFP, which happens at 4:30 p.m. tomorrow. So later on, we had the interest rate decision by the Reserve Bank of Canada. So this one came in at 5% as expected, meaning that the Bank of Canada is not looking to continue with the rate hikes. So its potential peak is 5%, and then from there, perhaps we'll be seeing some rate cuts next year. So then we had the IV PMI, which is an indication of economic conditions in Canada. So this one came in at 54.7, an improvement from the previous number of 53.4, of course, way over expectations, basically indicating that the Canadian economy is currently very resilient. So crude oil inventories came in lower than expected at negative 4.6 million barrels. Remember, this is the change in the inventory week over week. So in the last 1 week, the crude oil inventories in the US dropped by 4.6 million, which is a huge drop from the previous reading, which was an increase of 1.6 million. So in this case, it basically means that there is a tighter supply of oil, which was largely expected to be bullish, but overall we saw oil prices continue tanking downwards. So today, we are looking at the Australian goods balance, which came in better than the previous number, but missed expectations. So USD denominated trade balance for China was an improvement to 68.4 billion. Then trade balance for China, in this case in yuan, it was at 491 billion, and this is better from the previous number. Then Japanese 30-year bond. Then we had the leading indicators index coming in better than expected at 108.7%. All these are low impact news. Unemployment rate in Switzerland remained the same at 2.1%. Then German industrial production dropped by negative 0.4%, which was an improvement from the previous drop, which was negative 1.3%, but still below zero, which means contraction. So Halifax housing price index in the UK improved by 0.5%, better than the expectation of 0.3, but lower than the previous number. Then we had the French trade balance coming in at negative 8.6 billion, which was slightly better than the previous number of negative 8.9, but slightly missing expectations. So the last data point was the CHF foreign currency reserves, which came in at 642 billion, slightly lower than the previous number, which was 658 billion. So going on for the rest of the day, I don't see any major news besides the weekly unemployment claims from the US, and these will be released at 4:30 p.m. So in this case, it will be yet another indicator on the week showing us the state of the US job market conditions. So on Tuesday, we had the JOLTS job openings, which came in at 8.73. So the number of job advertisements in the US dropped to 8.73 million, which basically means that there is less companies looking to hire, which means that the job market conditions are softening. So when there's an excess number of companies trying to hire or advertising for jobs, in that case, you know that the job market conditions are tight, meaning that labor demand is not the same level as supply, which usually indicates a very tight job market. But then in this case, we are seeing softening conditions, and this is something that the Fed is expecting. So if it's in line with the Fed's expectations, then it probably means that there will be no more rate hikes, and perhaps the card about rate cuts in early 2024 are playing out. So with ADP also missing expectations, we also have softening conditions. And then the third indicator will be unemployment claims before we look at the official non-farm payrolls on Friday. So with that in mind, now we look at one more article that I believe is very relevant to today's presentation. And I'll be getting this real shortly. Just a moment. I'm trying to find the article. Yeah, I found it. It's on Business Insider or Markets Insider. So Saudi Arabia may wage an oil market share war against the US, reversing output cuts and unleashing a flood of supply, energy expert says. So we have seen this happen over and over again, where if Saudi Arabia and the OPEC plus countries lose control of oil prices, they result to doing the opposite. So what we have been seeing is the countries that are part of the OPEC are working together to cut oil output. And every time they've been meeting over the better part of the year, they have been extending their oil output cuts. So by reducing the amount of oil they bring into the market, then they boost oil prices to the upside. However, what has been happening over the better part of the year is that whenever the OPEC plus nations cut their oil output, the non-OPEC countries have been expanding their output, especially the US. So the result of these, if one party is reducing output and the other party is increasing output, is that the non-OPEC countries have been gaining more market share from this, while OPEC has not had any control on oil, leading to lower oil prices. So despite all the output cuts that have been implemented by the OPEC, what we have been seeing is oil prices moving further downwards. So Saudi Arabia is struggling to boost oil prices with production cuts and may soon make a dramatic reversal aimed at the US, according to energy expert Paul Sankey. So in an interview with Business Insider, he said Saudi Arabia may pivot to ramping up production to flush the market with a flood of supply in the first half of 2024. And that's not to target emerging producers like Guyana or Brazil. So you have got to attack the guys that's making the marginal decision to drill or not, and that guy is Mr. Permian Basin, Sankey said, referring to the US shale epicenter. So normally, if OPEC loses control of oil prices and realizes that every time they cut output, it's only benefiting the opponents where they are producing more and taking advantage of the lower supply, then in this case, when Saudi decides that they want to take their market share back, they basically start flooding the markets with excess oil. So when they pivot and now start producing more oil and flood the market with this oil, it drives the oil prices really low, such that the companies that are operating at a small margin, especially the shale oil companies in the US, they find it unreasonable to produce at such low prices. So as a result, it bankrupts them. And when it bankrupts them and they stop drilling oil, then you start seeing Saudi Arabia benefiting from this because it recovers its market share in the global oil market. So Saudi Arabia is currently producing 2.5 million barrels a day, which is below maximum capacity. So if the country follows through with additional supplies that sink crude prices, the goal would be essentially to bankrupt the industry by making it unprofitable to drill oil. Sankey explained. It's a tactic that Riyadh used in 2014, as well as in 2020 to regain control over oil prices. So now looking at the charts, if you look at what's currently happening with oil prices, you can see that we had a big jump downwards. So just past midnight, there was a big gap. I remember we had yet another gap from the weekend. And now you can see that oil prices are now trading at a multi-month low of $74 per barrel. So from the daily chart, this is how it looks like. So the last time that we saw oil prices trading at these levels was on the 3rd of July. So then another key thing to consider is that if you zoom out weekly, you'll notice that we had multi-year lows happening some time back, and this was somewhere in 2020. So this is the lowest price that we saw in UK oil or Brent oil, where we saw prices dropping all the way to $19 per barrel. So if you look at US oil, I believe the drop was even lower. So if you go to, let's say, weekly, you'll notice that this was the lowest price in April. I believe this was April. Yes, April 2020. So the oil prices were trading at $8.43 per barrel. So when this happened, this specific scenario, this is when Saudi Arabia was at an oil war with the US. Sorry, apologies. Sometimes a sneeze comes without warning. So apologies for that. So when this happened and there was a big crash in oil prices from around $60 per barrel, we went all the way down to $8 per barrel. So at these price levels, the US shale companies will not be able to produce oil profitably. So in that case, they would shut down and Saudi Arabia would soon reclaim the control of the oil markets, later driving the oil prices all the way up until we saw, I believe it was $126 per barrel. So now we are seeing something similar happening. So the market is basically betting on Saudi Arabia turning and changing direction and starting to produce more oil. So as a result, we are expecting to see further downward prices. So from the 1 hour chart, this is what we are having. So for US oil, currently at $69 per barrel. And if we move somewhere below $50 per barrel, then that's completely unprofitable for US shale companies. So in this case, we could be expecting some further continuation of the bearish momentum in US oil, as well as in Brent oil. So I hope that makes sense for everyone. So this is UK oil. We expect some further downside momentum. So as for gold, what we are seeing here is the big jump that happened at Monday open. Gold prices went all the way up and formed a new all-time high of around 2183. Then it pulled back, erased gains within the same day, and it did not stop there. It kept going downwards and crossed at a very strong daily low, which was at around 2030, having seen 2183 within the same day. So this is the most volatile I've ever seen gold trading in the markets. So later on the following day, you can see there wasn't much to look out for in the markets. So if I use a smaller time frame, like such as the 5 minutes time frame, you can see that yesterday price opened here, went up, and then started trading within this channel. Slightly broke it before getting back to the same channel, and now we have seen a double bottom pattern form here. So this double bottom basically represents a nice form of reversal. So for those who know their price action, we know that this is a W-shaped pattern. So from Monday's evening, we found this bottom here. Then the market went back up and formed what looks like a neckline. Then it went back down and formed the other side of the pattern, which is the other bottom. So now we have a double bottom formation happening in gold. And this basically means that we have a reversal pattern. So now we are looking at a potential break above this neckline here, which is supposed to be indicative of higher prices in gold. So we should be expecting to see some further upside momentum after the market has broken this area here. Of course, the most likely potential target would be the high we saw last evening. And this is a price level of around 2039. So there's a good potential that we could be seeing gold prices making a rally and getting to the 2039.64 price level. So the dollar index, on the other hand, has been pretty resilient. So I would say this is a 6-day rally. So for 6 straight days, we have been seeing a very strong dollar index. But then since the open of the market today, we are seeing only this bearish momentum. So a weak dollar has had significant impact in other pairs. So a weak dollar saw the drop happening here in USD JPY after this consolidation formed over the last 3 days. So we all know what a consolidation is. It's when the price is making sideways momentum without much of a trend direction. So in this case, after after USD JPY consolidated along these lines, we had a nice break earlier this morning, and the break happened here. And as you can see, all this is just acceleration of price further downwards. So in this case, a weak dollar led to a very strong USD JPY. In this case, bearish momentum rather than the preceding bullish momentum. So we are seeing a very strong drop. Of course, our potential target now moves to a previous level that was acting as support or resistance. So in this case, I believe the most logical one is this one. We have 2 points, the market using this level as support. So 144.420 remains a nice target. And now we expect to see some further downside momentum in USD JPY. So for pound USD, we are seeing this reversal happening. So after breaking this trend line, moving up and then down, then we had the support in the yellow line. The support was basically broken on Tuesday. So on Wednesday, the market retests and continues pushing down. And now today we have another pullback upwards. So from a smaller timeline, we can already see that we are in this bearish momentum where the market is continuously finding resistance around these areas here. And now the market is at a crucial potential breaking point where we could be seeing a reversal happening here or a clean break and the market moves higher. So from what I'm looking at here, it seems like the market has been following this path for a while, and this is the last 3 days. So from the 4-hour chart, this is how it looks like. So it's a market that made a complete U-shaped pattern, found resistance, and then pulled back downwards. So now, if you look at this, we had the market pulling back down and then up, which basically formed what looks like a cup and a handle. But the handle seems to be too small. Maybe the market is going for yet a bigger handle. So pulling back downwards and then maybe higher. So the potential area of support here remains this level. So if you look at this level right here, seems like a nice support area, but then the market is bouncing strongly from this support. So now we observe this area to see if there will be a reversal. So if there's no reversal here, then the target remains 1.26048 if the bullish momentum continues. But then if it doesn't, then we continue with this 3-day pattern that is clearly visible on the 15 minutes chart. So as for Euro USD, we are seeing a strong bounce from the 1.07534 price level. So this is the bottom that we had identified on Tuesday, that the previous high here would become the new support here. And as the market broke lower and lower, we went to 1.08280 and then kept going down. Then yesterday further downwards, and today the market is bouncing strongly from that area. So with the dollar index being pretty weak, and then having this kind of pattern on Euro USD, then there's a likelihood we'll be seeing some further upside momentum. So the three candlesticks are indicative of strong bullish entry. So there's a potential we'll be seeing some further upside momentum here. So for USD CAD, we already broke this upper trend line. Then we found this resistance. And of course, if the market was to break that level, then the next level is all the way up to around 1.36537. So notice the coincidence of support here, resistance, and some further price action could see this asset get to this area. So there is that potential we could be seeing another rally getting to 1.36537. So then we have the AUD USD currency pair making a very strong bounce, as we had already identified the support. So the support was on our previous level, which was a high, a low, and now it's playing us as a very strong support. So now we are seeing the market dropping in the early sessions of Sydney. Then Japan going into London, we have a complete reversal. So a potential rally may continue and get us to 65872. 65872. So this seems like a significant resistance. And of course, if you look at the charts in history, you'll notice these levels. So the resistance here, the support here, and now the market could be headed to the same level. So US equity indices continue showing weakness. So after these patterns were broken, there's still some further downside momentum. Now the market is pulling back upwards. So in this case, if you use a 3-day pattern, then from the 15 minutes chart, you can see that this is a resistance level. So we basically observe what happens when price gets to this level here. So you can also combine this with the previous lows that we saw around this area here. So once the market gets to 15,834, this is when we start observing the price action to see if it's a clean break or whether the market rejects and continues moving downwards. So from the H1 chart, there's a likelihood that the market will find resistance here and then continue moving further downwards. So that was the NASDAQ. So for the Dow Jones, we are still in this consolidation. So I don't think there's anything to take away from this, rather than waiting for the right opportunity. So when the market eventually breaks either of the two trend lines, then we might have a direction. So betting that we'll have a breakout towards the lower side, and perhaps we'll be seeing some reversal happening in the Dow Jones. So for the US 500, we had the first clean break here. The market failed, jumped higher. Then we had the exhaustion gap here. Market covered the gap. Further downside momentum, and then today we are also attempting to close another gap. And if we don't, we'll still have to battle with a potential strong downside. So what is emerging on this chart here is that there's a strong support area here. So for the last couple of days, this has been working as a very strong support. So I would be very interested to see how price behaves once it gets to this trend line yet again. So it seems to me like we have had a very successful last 2 days where the S&P 500 was selling. So in this case, if we see some further downside momentum, then it could indicate that the market may have topped. Notice the previous high here, and now we have 2 consecutive days where price is attempting to move downwards, and this could be the beginning of a correction happening in the S&P 500. So European equity indices remain pretty strong, with the French 40 making a very strong rally here. Also, if you look at the Euro 50, a very strong rally here. So they seem like a very good buys for today. The UK FTSE 100 remains weak compared to the previous two. So Bitcoin, on the other hand, has formed this consolidation pattern since yesterday. So for anyone who is participating in this market, then it's pretty easy to observe this particular pattern and then wait for the eventual break. So it's only when the market makes the break that you want to participate, so that you can benefit from the direction of the break. So that's it for the day. Thank you very much, guys. So from there, I'll be trying to check on your questions. Hi, what's happening on the euro? As we have seen, there is a pretty weak dollar index, so all these measures are recovering against the dollar. Hello, Andre. Hello, Philip, J. Scood, Maureen, Sam. So from my observations in the Putin Middle East visit to UAE and Saudi leader, I see it's an extension of OPEC Plus meeting. Do you think what they discussed there will bring fresh impetus to oil markets? So they have been working together. Russia is part of the OPEC Plus. So the OPEC doesn't include Russia, but when you add the plus, now you have Russia and other economies. So they've been working together to control oil prices, and the oil output cuts evidently have not been driving oil prices as they expected, as they continue losing market share to the US and other non-OPEC producers. So as a result, they may result in doing the exact opposite, and that's the current concern, which is leading to a big sell-off in oil. So it has happened before. The last time we saw it was in 2020. And if it so happens, then we could be seeing single-digit oil prices. And when that happens, then it tends to be very volatile and good for traders. Can I buy XRP coins in FXPesa? No. All the cryptocurrencies on FXPesa platform are CFD products. So you will be able to buy the same way you buy gold, the same way you buy oil, same way you buy currencies, meaning that you not own any of the cryptocurrency. You are only trading a CFD with the goal of making a profit. So you cannot deposit or withdraw XRP, but it's tradable on the platform. So sharp weakening of the labor market is needed for financial markets to price in a US recession that we have long expected. Knowing that, is there a likelihood the mighty US will drag the rest? Yes, if the US goes into a recession, there's a very strong likelihood that it will drag the other economies. But then you have to understand the politics of this. With Joe Biden going into an election year, which will be November next year, then there's that potential that it will be trying to prop up the markets, protect investors as well as consumers. So we can basically say that a recession can be postponed. So if the US resorts to printing more money, then it can avoid the potential recession, and especially knowing that they are going into an election year, it makes no sense for the economy to collapse. So there's a very strong political goodwill to make sure that that doesn't happen. So there's a good chance that the markets will be propped higher rather than lower to avoid losing the election. Which assets are good to trade then should the scenario arise? So if you happen to get into a recession, it's a very simple trade. Buy gold, buy oil. Those two assets tend to do well. And now we have a new asset, which is Bitcoin. So if you buy those three, you'll be on the right side of things. Could you possibly explain the mechanism in yield curve control to support economic activity and foster a cycle of wage growth? I know it might sound easy, however, school me on it. So yield curve control is basically making sure that yields in the bonds market don't exceed a certain limit. So for Japan, in the last couple of months, it has been 1%. So if yields are rising in an economy, it basically means that they are becoming more attractive to investors. Nobody wants to invest in a low-paying bond. So if the yields are rising, then a lot of people will tend to invest in bonds. And the alternative, if they did not invest in these bonds, they'll probably invest in stocks and other areas of the economy. So if the government implements a yield curve control program, it basically absorbs extra demand in bonds in order to maintain the levels at, let's say, 1%, such as in Japan. And as a result of this, most of the money in commercial banks doesn't end up with the government, but rather it ends up in the economy. So commercial banks don't want to sit on their money. They want to lend this money, and their best customer is usually the government. So if the government is not willing to pay well, then they take risks and invest this money in the economy through loans to corporations and individuals, which basically leads to higher aggregate demand within the economy and, of course, higher production. So what is the profitability of trading in company stocks? Is it worthwhile? Yes, stocks are really good. If you decide to specialize in stocks, then even the rate of your survival in this market can be significantly higher. So stocks basically teach you patience. Then when they perform well, they can give you some good returns. So trading in stocks can be really good. And of course, they trade for limited hours. So you don't have to be monitoring the market for 24 hours compared to Forex. So if a stock market trades for 6 or let's say 6.5 hours, that's the only window that you're participating. And once the market closes, you can relax, go do some other stuff, and then come back the following day once the session starts. What are your expectations on NFP? I think I've seen the 3 data points miss. I've seen the JOLTS job openings miss. We have seen the ADP non-farm payrolls miss, and now the third indicator will be today, which is the weekly initial job risk claims. So we could be seeing that also happening. So I think the US job market is softening, so there's a chance that the NFP number will miss. The markets are pricing in 150 basis points of rate cuts from the ECB with a weaker euro. The dollar index stands to gain given the euro share in the DXY market composition. What do you think? The 150 basis points for the ECB by next year, I don't think it's a huge cut compared to also what we are seeing with the dollar. So if you look at the overall rate, even if the ECB goes for 150 basis points and the US continues cutting, then the dollar will still have a higher yield compared to the euro, which means that the dollar will still be significantly stronger than the euro. So thank you very much, guys. I think I've answered all the questions. Remember, we have another session at 8 p.m. So if you've just joined and you don't know that on Thursdays we have an 8 p.m. session, then you should get prepared, set a reminder, or simply subscribe to the channel. Set reminders on so that whenever I have a live session, you get a notification and you never get to miss any of these sessions. So thank you very much, guys. And also remember, there is a new episode of the Bullish Banter podcast. So make sure to check it out and hopefully you get to learn a thing or two. So thank you very much. And I hope to see you guys later. So last question, are you a dollar bull or a bear at the moment? So the dollar seems pretty bearish to me. So until investors fully price in the potential for an early rate hike in Q1 next year, then the dollar index remains weak compared to other currencies. So for now, I remain a dollar bear, but long term, I am still bullish on the dollar.